Investors don't agree on much, but they do agree that making money in the market comes with a steadfast strategy that is built around a set of rules. Think for a moment about your early days as an investor. If you're like many, you jumped in with very little knowledge of the markets. When you bought, you didn't know what a bid-ask spread was, and you sold either too early if the stock went up or too late if the stock dropped. If you don't have your own carefully crafted suite of investing rules, now is the time to do it, and the best place to start is to ask the people who have had success in their investing careers. We not only found people who can claim success, but who are also some of the most successful investors in history. Welcome to our channel. Today we bring you the list Top 10 Most Successful Investors in the World. Before you continue, please click on the subscribe button and press the bell icon for regular updates. Number 10 is David Tepper. David Tepper might be the best performing investor over his 23-year career. He's averaged 30% annualized returns after his management and incentive fees. That's almost 40% annualized returns before fees. He runs the $18 billion hedge fund, Appaloosa Management. Tepper is unique in that he combines distressed investing with global macro investing. Last year, Tepper returned 11% net fees in a down stock market, mostly due to a big bet against the euro. So, these are the best and richest investors in the world. Still, they have losses and drawdowns on their investments just like anyone else. But they have some unique traits that also set them apart from everyone else. Among those traits is influence. When they buy stocks, they tend to take very large stakes and often become the largest shareholder in that company. Number 9 is John Bogle. Bogle founded the Vanguard Group Mutual Fund Company in 1974 and made it into one of the world's largest and most respected fund sponsors. Bogle pioneered the no-load mutual fund and championed low-cost index investing for millions of investors. He created and introduced the first index fund, Vanguard 500, in 1976. Jack Bogle's investing philosophy advocates capturing market returns by investing in broad-based index mutual funds that are categorized as no-load, low-cost, low-turnover, and passively managed. John Clifton Jack Bogle was an American investor, business magnate, and philanthropist. He was the founder and chief executive of the Vanguard Group and is credited with creating the first index fund. Number 8 is Micheal Steinhardt. Micheal H. Steinhardt is an American investor, hedge fund manager, and philanthropist. In 1967, he founded a hedge fund, Steinhardt Partners, that averaged an annualized return for its clients of 24.5% from 1967 to 1978. His fund lost 1/3 of its value in the 1994 bond market crisis. Naturally, he did very well out of the whole endeavor, and by 1993 he was among the 400 richest people in the world with an estimated worth of $300 million. As an investor, Steinhardt thought like a long-term trader, but used these insights to make short-term strategic trades. Most of his trades were directional in nature, drawing on an eclectic range of securities based upon their exposure to wider trends rather than their position with a certain sector, with a team of analysts on hand to do the necessary due diligence on each stock. Number 7 is Peter Lynch. Peter Lynch managed the Fidelity Magellan Fund from 1977 to 1990, during which the fund's assets grew from $18 million to $14 billion. More importantly, Lynch reportedly beat the S&P 500 index benchmark in 11 of those 13 years, achieving an annual average return of 29%. Often described as a chameleon, Peter Lynch adapted to whatever investment style worked at the time. But when it came to picking specific stocks, Peter Lynch stuck to what he knew and/or could easily understand. Peter Lynch is an American investor, mutual fund manager, and philanthropist. As the manager of the Magellan Fund at Fidelity Investments between 1977 and 1990, Lynch averaged a 29.2 annual return. Peter Lynch's performance and stock-picking ability stands for itself. He became a master at studying his environment and understanding the world both as it is and how it might be in the future. Number 6 is Steve Cohen, founder of SAC Capital and Point72 Asset Management. Mr. Steve Cohen is one of the wealthiest hedge fund managers in the world, with a net worth of approximately $14 billion. At his very first day at a job as an options trader, he made a profit of $8,000 and eventually used to make $100,000 a day for his company. He started SAC Capital in 1992, but was forced to shut it down by federal prosecutors. Since then, he has been running his own money through the family office structure, generating handsome returns. Since then, Cohen has run his own money, 14 figures, through a family office structure called .72 Asset Management, which generated almost a 16% return in 2015. He launched Bridgewater in 1979 and has grown the company to the giant it is today in the years since. Number 5 is Ray Dalio. Dalio runs the largest hedge fund in the world named Bridgewater Associates and has an estimated wealth of approximately $18 billion. Since its inception in 1979, the investment firm has grown exponentially and has over $160 billion in assets under management. He is considered to be an asset allocation specialist and believes in the simple concept that over time, asset classes will improve and will provide better returns than cash. Mr. Dalio gauges the asset classes based on volatility, which has ultimately given consistent returns to his two major hedge funds, the All-Weather Fund and Pure Alpha Fund. Investment approach. The methodology followed by his fund is that of a diversified approach designed to provide consistent returns over a long period of time, while limiting risk during down years. He launched Bridgewater in 1979 and has grown the company to the giant it is today in the years since. Number 4 is Carl Icahn. Carl Icahn is an activist investor and modern-day corporate raider, buying large stakes in companies and attempting to get voting rights to increase shareholder value. Some of his holdings have included Time Warner, Yahoo, Clorox, and Blockbuster Video. Icahn has made his fair share of enemies over the years, but investors shouldn't take his advice strictly in terms of interpersonal relationships. How many times in your investing past have you read an article, watched a news report, or took a tip from a trusted friend about the next hot stock and lost money? There is only one piece of advice to act upon. Use your own exhaustive research based on facts, not opinions, obtained from trusted sources. Our advice can be considered and verified, but it shouldn't be the sole reason to commit money. Though Mr. Buffett is considered the greatest investor alive, Mr. Carl Icahn has beaten the exceptional track record set by Mr. Buffett. Number 3 is George Soros. George Soros was a master at translating broad-brush economic trends into highly leveraged killer plays in bonds and currencies. As an investor, Soros was a short-term speculator, making huge bets on the directions of financial markets. In 1973, George Soros founded the hedge fund company of Soros Fund Management, which eventually evolved into the well-known and respected Quantum Fund. For almost 2 decades, he ran this aggressive and successful hedge fund, reportedly racking up returns in excess of 30% per year, and, on 2 occasions, posting annual returns of more than 100%. Mr. Soros, a Hungarian-born American, is a legendary hedge fund tycoon managing the Quantum Fund. The fund has successfully generated an annualized return of more than 30% since its launch. He has made billions of dollars betting on big macro trends. Popularly known as the man who broke the Bank of England, Mr. Soros had reportedly made a profit of $1 billion in 1992 when he shorted the British pound. Number 2 is Micheal Bloomberg. Mr. Micheal Bloomberg, who initially started with investing $10 million from his financial analysis company, is now the ranked 2nd richest investor in the world, with a net worth of approximately $51 billion. He is also an author, philanthropist, and an active politician shelling out millions of dollars during campaigns around the United States. The former mayor of New York City, Bloomberg's wealth comes from an empire he built following a layoff from his Wall Street position. Initially investing $10 million from his financial analysis company, Bloomberg ranks 2nd with a current value of $51.7 billion. This 76-year-old continues to be politically active, shelling out millions of dollars during political campaigns around the U.S. Number 1 is Warren Buffett. Warren Buffett is widely considered to be the most successful investor in history. Not only is he one of the richest men in the world, but he also has had the financial ear of numerous presidents and world leaders. When Buffett talks, world markets move based on his words. Buffett is also known as being a prolific teacher. His annual letter to investors in his company, Berkshire Hathaway, is used in college finance classes in the largest and most prestigious universities. Buffett gives 2 key pieces of advice when evaluating a company. First, look at the quality of the company, then at the price. Looking at the quality of the company requires that you read financial statements, listen to conference calls, and vet management. Then, only after you have confidence in the quality of the company, should the price be evaluated.